I've been suffering from a bit of a cold this week, so I'm on the better side of it. And as such, I'm not in the office because I don't want to spread my germs around. So, and my voice might be a little off. Anyway, it is what it is, and I'll yet try to do my best. And Brittany, appreciate you on your introduction. Definitely timely. We will spend most of our time today talking about Bitcoin. We will touch lightly on Ethereum, and we really won't be touching at all on any of the other cryptocurrencies. So maybe it would be a better way to say timely updates to Bitcoin. I just want to start by saying I have been personally investing in Bitcoin. I began doing that in January 2021. At that time, I opened a Coinbase account and wanted to just see what that was like. And it was kind of an interesting process. When I opened the account, you open it. It's fairly easy to do online, and then you link it to your bank account. And the first thing I tried to do was transfer money from my bank account into my Coinbase account, and alarm bells went off like crazy at my bank. And in fact, they told me I cannot transfer money. So the initial transfer went through, but then my banker called me. It's like going, you can't do this. We're going to close your accounts. So it was a little different time then. Some of the banks allowed you to transfer money to Coinbase, others did not. Mine did not, it does now. And we had some interesting conversations surrounding that. Anyway, I also, at the time, started investing in instrument through a company called Grayscale. Grayscale had a Bitcoin and Ethereum option. These were not what we refer to now as ETFs, but they were actually futures contracts, rather complicated. We won't get into a lot of that today. We'll discuss these instruments a little bit later and sort of their history. But that allowed me to buy Bitcoin or a quasi-Bitcoin in my brokerage account and in my IRA. I continue to own those today, although I no longer own the Grayscale instrument. I own one of the spot ETFs, which is through BlackRock, and it's called the symbol's IBIT. So for the most part, I would say I've got some familiarity with Bitcoin, and as any financial instrument, I don't just rush in to buy things. I spend a lot of time looking at them, studying them, and trying to analyze what the pros and cons are. So I would say that at the end of the day, we feel it's our duty to share with you what we have found out. And we are fiduciaries. Our only responsibility is to you to be stewards of your assets. As such, we sort of have a responsibility to know and understand new financial instruments, good or bad, and share that information with you. You might imagine if I go to an investment conference, there's a whole room full of people that want to sell financial instruments to you guys, but I'm the conduit through which they get to offer their financial products. And 99% of that stuff we say no to. And frankly, we generally seek out and search and find what we're interested for you to buy, as opposed to the other way around. So with that, next slide, Britt. A lot of you might know, what it is, but for you that don't, Bitcoin was created by Satoshi Nakamoto, and that may or may not be a real person. It was outlined in a 2008 white paper, and it's a really appealingly simple concept. Bitcoin is digital money that allows you for secure peer-to-peer transactions through the internet. So you can transfer assets to anybody throughout the world. Next slide, Rick. So some interesting things here. Unlike services like Venmo and PayPal, I guess there's some bank instruments as well, they all require the financial system for permission to transfer money using existing bank accounts or debit cards. Bitcoin is decentralized, and that's the really key factor here. There is no government, bank, or other institution that is involved, and that's an interesting concept. There will only be 21 million Bitcoin ever minted, and that's a process that's ongoing. About 94% of all Bitcoin is in circulation already, and the rest will be coming out over the next 20 years in smaller and smaller increments. The digital money cannot be inflated. It cannot be manipulated in any way. It isn't also necessary to buy entire Bitcoin, which today is trading like $68,000. So you can buy just a fraction of a Bitcoin, really in any amount. A Coinbase account, by the way, trades 24/7. It's constantly being priced and traded. So if you open one of those accounts, you can trade in the middle of the night if you want. Next slide. So how does it all work? Well, we won't get a lot into miners, but miners are basically part of a group of a community of computer banks, if you will, and their basic job is to keep the blockchain moving, and they get rewarded in issuance of new Bitcoin for doing that work. And if you think about what a blockchain is, it's similar to a bank ledger. So when we open a bank account, we have name, account number, etc. Well, the blockchain is basically that, except for there are no people involved per se. It's just the computer network. No company, no country, no third party. It's all built into the system. So they can't, there isn't going to be somebody at some point that says, oh, well, let's issue 5 million more Bitcoin. That won't happen. So it's a system that's, sort of been embedded into play. So next slide, excuse me. So why are we talking about this today? Well, there's some really big changes that have happened, and we're really here just to educate you, to encourage you to do your own research, and maybe re-examine Bitcoin with an open mind. Bitcoin is a paradoxical investment. Some love it, others hate it. It's been my experience that people have very strong opinions, both pro and con. Many feel that Bitcoin is a space where money launderers, drug dealers, illicit people are allowed to conduct their trade. And I think in the early years, that certainly is a true statement. I think it's less so now, and we'll get into why I feel that. Times have definitely changed. And regardless of how you feel about it today, I'm going to encourage you to understand it in its sort of new light. The recent changes in 2024 that happened just this year are highly important. And in fact, there are one law that was passed by Congress yesterday, and there's another impending change today, which I'll touch on again later, that will demonstrate how Bitcoin is coming to the mainstream. So next slide. The big change that I'm referring to is the adoption of a ETF that debuted in mid-January 2024. I think most of you as clients know what an ETF is. And essentially, Bitcoin became a security. It can be traded like any other asset class. It's done through an ETF, which is a basket of assets that have very low cost. It's regulated, and in fact, SEC is the regulator. Most people are familiar with ETFs because we use them in all of our portfolios. So if you wanted to buy Bitcoin in your brokerage account, in your IRA, it's as simple as trading any of the ETFs that we currently own. You could also do something and do it on your own through a Coinbase account. And there are other sort of exchanges like that where you could buy Bitcoin or Ethereum or others. By way of history, you could buy a Bitcoin trust as far back as 2011. This was this company I referenced before, Grayscale Bitcoin. And they used futures contracts to buy Bitcoin. So if you bought into this, it was a trust, it wasn't completely liquid, it didn't perfectly, and in fact, in many cases, poorly track Bitcoin prices. There was a point where at one stage, the value of the assets were highly discounted to the price. So as an effect, you thought you should own $10 worth, but you're only showing $5 worth of value. And that was because it was not an exchange traded fund and it didn't track the price perfectly. But it was a way to buy Bitcoin in an IRA, which was not available any other way. So Coinbase, you've got to just use after-tax assets. Some of our clients who had interest in Bitcoin came to us and they had exposure. Most did not, but it would be a sort of a proactive thing. A client called up and said, hey, what do you know about Bitcoin? And we could talk to them about that. And if they're interested, and if you were wondering yourself, the symbols were GBTC or ETHE. And those were GBTC still exists today. It was the biggest Bitcoin, but it did convert to a spot ETF. So why is that important? Well, effectively, when it's now an ETF, it is a new asset class. I think you can consider it as an alternative investment. We will likely, I think we've got to categorize the portfolios now as an alternative, but it's really likely more of a satellite. And if you're familiar with our core and satellite strategy, satellites are things that we add to add alpha or higher return. And we'll likely categorize it like that going forward, because it may not be something everybody wants to do. In fact, I expect many will not want to do that, and that's perfectly fine. But as a fiduciary, again, it's our job to educate you, make you aware of things, and then we can have a conversation about whether or not you feel that it's appropriate for you. So let's talk more about Bitcoin. We describe Satoshi and this idea that it was kind of like a currency. And it is in the way that you can trade it with another individual, anybody in the world. But I think of it differently than that today. I think of it rather as a store of value as opposed to a currency. Because you can't go down to the store and use Bitcoin to buy groceries or most anything, really. I mean, I guess at one point you could buy a Tesla with Bitcoin, but I think they stopped doing that. And if you think about currency, you need to think about what we refer to as fiat currency. And why the name fiat currency? Well, fiat refers to the fact that there's nothing that really backs the currency other than the government that's behind it. And that wasn't always the case. As you may recall, we used to have a dollar that was backed by the gold standard. That ended in 1971. So the U.S. dollar is a very strong currency. It's the currency of the world at this moment. That may not always be the case. But the interesting thing is that the U.S. dollar is designed to lose 2% of its purchasing power every year. That's what the Fed wants. They want to see inflation at 2%. So what that means is that if you own a U.S. dollar for 15 years, at the end of that 15 years, you've lost 30% of your purchasing power. You've got the same number of dollars, but you purchase 70% of the goods that you used to purchase. And that's assuming that they hit their target of 2%. And you can imagine, in past years, inflation has been much higher. My dear wife, Patty, mentioned to me the cost of fast food has just gotten exorbitant. And we don't really go out to do fast food much, but since I've been a little under the weather, some soup and things sound like that would be pretty good. She went and bought two soups at Panera. It was an onion soup and a chicken noodle soup, which were great. They were very tasty. And they came with some accompaniments, bread and some cheese for the soup and croutons and et cetera. And the price of that was $52. $52 for two soups. So she was a little taken aback, but that, is a direct illustration of inflation and impact on your dollar. We've got the same number of dollars, but we're just buying less stuff. Now, that's in the, in the good currency. What about the bad currency? Imagine if you live in Argentina. I'll use an example of a client who lived and was from Argentina. He sold his car, this is a number of years ago, 20 years ago, and it was a Ford Mustang. Sold it on a Friday, got the money, put it in the bank. Over the weekend, the currency was devalued. And on a Monday morning, he could buy equivalent of a hubcap for a car instead of a car. So if you own Argentinian currency today, very similar thing is happening. So there's a pretty strong case to make that storing money in the bank, in the currency of your country, may not be the best way to do it. And that's where Bitcoin comes into place. So many people throughout the world are going to find that, maybe better to store your money in something like Bitcoin. The other way I think of it is sort of as an alternative to gold. If you think about gold for years and years, it's been an inflation hedge, right? So if inflation goes up, the value of gold goes up with that, which is good. But gold has its individual problems as well. First of all, it's very heavy. And if you own a lot of it, it's very difficult to transport. You probably need an armed guard to protect it if you own enough of it. And if you wanted to trade it with somebody across the world, well, that would be almost impossible. So exchanging it even for cash becomes problematic because of fees involved and so forth. So I think of Bitcoin kind of as a store of value, a sort of digital gold. So it's gold that can be traded. It theoretically should be an inflation hedge, and consequently, it has a place for many people, not for everybody. Let's switch slides, Britt. So why are we here? Well, returns, right? You take a look at those returns. Those returns are crazy. Last 5 years, 63% return. Last 10 years, 63% return, average annual return. That's not cumulative, that's average annual return. And look, in the early years, I had no interest in Bitcoin. I frankly thought it was nothing and it would go to zero. And those who invested in Bitcoin in the early years made a literal fortune. 2013, Bitcoin was up 5,189%, 51 times your money. If you'd invested $100,000, you're now worth $5.1 million. If you'd invested 10, you'd be worth $500,000. Really quite incredible. And so the reason we ran the 5-year number was that took out that 5,000, because that's sort of like probably too high, right? I will say in 2017, which was in that 10-year return, but not in the 5-year return, Bitcoin was up 1,162%. Crazy, right? But the interesting thing was 5 years, that number's not in there, and it's still up 63% per year over the last 5 years. That should get anybody's attention, right? Now, obviously, there's risk involved. It's highly, highly volatile, and it's something that we're going to address under our risk topic. But you should also know that it's if you bought it and you held in there, it's done rather well, and really, again, that's why we're here. But it's not all roses. So let's switch slides. Let's talk about what does the future look like and why we think that it's worthy of your consideration. We think that there's going to be much wider adoption of this instrument, primarily due to the ETFs. This could include pensions. We have just learned that the Wisconsin pension plan is now buying the IBIT ETF. It could include sovereign funds, the Saudi money, oil money. Some stats indicate that there are some very large mega buyers. When you have an ETF, there are certain filings that are done for people that buy $100 million. So there's some disclosure on that. And these are just coming out, but there are a lot of mega buyers. El Salvador and Central African Republic have adopted Bitcoin as the official currency. Very interesting. Will there be others? Perhaps. What about people like us, registered investment advisors? Registered investment advisors control a vast majority of the wealth in the country. That shift has happened from the old brokerage companies, what I sometimes refer to as the evil empire. And they're not really evil, but that's just a little joke that I like to make. But registered investment advisors control lots and lots, the vast majority of retirement assets. Will they start allocating funds as a part of a diversified asset class? Perhaps. Maybe that's why we're here. We believe as advisors, we have a responsibility to educate clients about Bitcoin's potential as well as its risk, but we do feel that there will be much wider adoption. And if that were to be the case, what we would expect is that you would see a rise in price. Demand creates a rise in price. And remember, there are only 21 million Bitcoin that will ever exist. And if pension plans, countries, sovereign wealth funds are buying, and there's only a limited supply, the only thing that could happen is that the price will go up, perhaps substantially. Now, listen, I'm just trying to educate. I'm not a cheerleader for Bitcoin. There are some people out there who are cheerleaders, and I'd encourage you to go do some research. I use YouTube. There's a lot of crazy stuff on YouTube, but there are some very substantial people that think Bitcoin could go to $1 million. It's at 8,000 today. One of the biggest proponents is a gentleman by the name of Michael Saylor, Saylor. He's an executive chairman of MicroStrategy Corporation. He's a brilliant guy. He's a billionaire, Ivy League educated. His company actually was one of the .com bust companies. And when it started at $5, went to 95, and then went all the way back down again. They do a software, but he made a pretty strong argument about Bitcoin as the future of transferring assets. And then he took his corporate, basically treasury, and started buying Bitcoin. And as of May 1st, 2024, MicroStrategy owns 214,400 Bitcoins. They bought those at an average price of $35,000 per Bitcoin. So his total cost is $7.53 billion. Today, those holdings are worth $14.8 billion. MicroStrategy stock is up year to date 160%. So Michael has a lot to say, and I would encourage you to think about what he has to say. But look, Bitcoin was the home of some rather unscrupulous characters in the last several years, so we cannot ignore the risk. So let's talk about those to some extent. Next slide, please. Okay, so the question we hear a lot is, do you think Bitcoin is going to go to zero or be regulated out of existence? And I thought that a lot for a long time, probably up till 2021. Was it real? Would it really exist? Et cetera, et cetera. and it was certainly, some concern about that. I think today that is probably not the case. It won't go to zero. And why? Well, it's become really, really big. Okay, Bitcoin itself has a market value of $1.34 trillion at today's price. That's a lot of money. That compares to some of the largest corporations in the world. Largest corporation today is Microsoft at 2.89 trillion, Apple at 2.63, NVIDIA, which reported earnings yesterday, so my figure's probably not accurate, but it's 2.16 trillion. As an example, when you look at these companies, they're so big that almost too big to fail. And I think that you might make that argument about Bitcoin today. Now, let's talk about the ETFs for a moment. Grayscale, Bitcoin, the original instrument, which is now an ETF, is currently 20 billion. BlackRock, an ETF that started in mid-January, is currently at $18 billion, and Fidelity is at 10 billion. Those are the three largest. And in fact, BlackRock's IBIT was the fastest ETF in history to $10 billion, and did that in 37 trading days. That meant it brought in $27 million a day for the first 37 days. So this is, something that's very big, very different, and probably too big to fail. Could governments ban Bitcoin? I mean, they could certainly try, but remember, it's a system run by a blockchain. There's no government, corporation, or individual in control. Short of outlawing it would be difficult to do. It's run by computers on the internet on a protocol. So that's probably the case. Now, in recent years, we've had some really bad actors. You might remember the FTX case, Sam Bankman-Fried, now in jail. They were selling Bitcoin that they didn't have and creating a ledger that was false. There's also the failure of Binance, where the CEO, Changpeng Zhao, a Canadian, pleaded guilty to federal charges of $4 billion. These scams happened in the 2020s, really, identified in 2022, led to a huge drop in Bitcoin price in 2022. In fact, Bitcoin lost 62% of its value in 2022, largely attributed to those bad actors. I would also point, that there are other terrible performance years. We talked about the great up years. Well, 2014, Bitcoin lost 50% of its value. 2018, 72% of its value. So, I mean, it's a highly volatile, highly speculative, to this point, instrument, and it's kind of scary, right? I mean, nobody wants to go through negative returns like that. So these are some of the risks that we have to think about as we look at Bitcoin. And we've seen the scams. The money laundering, the bad guys. Are they out of Bitcoin? I don't know. I think so, but maybe there's certainly some bad actors out there. Time will tell. Important note, I mentioned this earlier. Yesterday, the House passed the Financial Innovation and Technology for the 21st Century Act. They call that abbreviation is FIT21. You can look it up. It's considered a watershed moment for digital assets, as the House is basically wanting to provide robust consumer disclosure and consumer protection for digital assets to flourish. I'd also mentioned another thing that happened, I think, and that is today, the SEC is going to rule on a spot ETF for Ethereum, which is the second largest cryptocurrency with a market cap of $448 billion. It was widely expected that that would not be approved, and it may not. And it is going to be announced today, but just check to see if it has happened, because as of earlier today, it had not. So bear with me. I'm going to do this live. did the SEC approve? And as of now, refresh. Stay tuned. It has not yet made a ruling, but that will happen by the end of the day. And the reason I mention that, on the risk perspective, is because it's becoming a lot more sort of wide stream, acceptable than it has been in the past, certainly with risk, certainly with potential return. So these are very interesting times indeed, which might describe a lot of what we do. So next slide. Okay, so we're going to wrap up here. We do think Bitcoin is a new asset class. It is worthy of consideration. It adds diversification, which basically has the potential to increase return or reduce risk. Now, I'm going to go back to something many of you heard a lot, and that's modern portfolio theory. We've long spoke about the work of Harry Markowitz. He was the father of modern portfolio theory. Harry lived here in San Diego, in fact, passed away last year in his 90s. He was truly an icon in our business. And I had the great fortune of getting to know Harry and talking to him about how he came on to his theory. But the idea behind modern portfolio theory is you could combine groups of assets together that were negatively correlated, which meant they sort of, one went up, one went down, they sort of marched to their own drummer. And that was, the idea behind that is creating, instead of the high peaks and valleys, you could smooth the line out. Most people make big mistakes in the big drop. So I won't get into the full example of today. I think most of you know the story. However, I did want to cover some concepts on risk and return that are relative to Bitcoin. And that has to do with negative correlation. So I'm going to use some terms here, some that you're certainly familiar with, return, and some that maybe you're less familiar with, which is beta. So as an example, S&P 500, a basket of S&P 500 stocks, has a long-term return, average annual return of 10%. It also has a beta of 1, which means that it accounts for the same level of risk as the S&P 500. So if you introduced another asset class that had more risk, it would have a higher beta. Twice the volatility, you'd have a beta of 2. So I'm going to introduce another asset class, and we're going to do a little comparison here between S&P 500, which has a long-term return of 10 and a beta of 1. And I'm going to compare that to a half S&P 500 and half small cap. Small cap, the statistics on small cap are a higher return, 12%, with a beta of 2. Okay, so you get a 12% return, but you have twice the volatility. And I don't know about you, but if I was thinking about it, I said, well, why would you want to take twice the risk to get just a 2% higher return? Doesn't seem like a very fair trade-off. So if you were consequently to put together a portfolio that was half S&P 500 and half small cap, the expected return would be 11. The 12% and the 10% divided in half is 11. And if you were to do it mathematically, you would assume that the beta would be 1.5. So 50% more volatility for a 0.5% more return. But as Markowitz proved, the beta is not 1.5, it's 0.8. So you got lower volatility and a higher return by introducing a higher risk asset class. And intuitively, if you think about it, you would realize that these are so negatively correlated assets, and they're further diversified. And consequently, you can create a lower risk portfolio with potentially a higher return. That's what's referred to in modern portfolio theory as efficient frontier. So when I think about Bitcoin, I would say that, there's a possibility that we could take a small allocation and it should be small because, for most of you who are retired, um, never forget rule number one: don't lose the money, right? But if we were to take a 1 or a 2% allocation to Bitcoin and it goes through the roof, goes to $1 million, that would help us. If it goes to zero, it's not going to kill us. That's a 1 or 2% allocation. So I think you can make an argument that there is a place for Bitcoin in a well-diversified portfolio, and that's kind of why we're here to talk about those things. So at the end of the day, modern portfolio theory allows you to introduce higher volatility asset classes that can be efficient. Ultimately, I think what's going to play out here, and this is just an opinion, and remember, we can be wrong. We're constantly apologizing about things. We get many things right, but I suspect we're going to see a lot more demand for Bitcoin because of the, really the ETFs and perhaps RIAs and perhaps governments and perhaps pension funds, perhaps ultimately 401ks that becomes a choice. I mean, if that's the case, you could see a very large increase in price. If it were to go to $1 million and we never told you about it, we would feel bad about that. If it goes to zero and it's a small allocation, I think it's perhaps worth the risk. Also remember, there are many unknowns here. There could be other bad actors, and nobody knows how this will play out. But we have a pretty good sense that this might be a good place for a very small allocation in your portfolio. So with that, I'll wrap up our formal part of the presentation and open it up for questions.
All right. Well, thank you, Troy. That was a wonderful presentation, and I think we all appreciated your education on that topic. So I'll go ahead and start going through these questions. We have several here, and feel free to keep your questions coming. These are really good. So I feel like we're touched on this a bit, Troy, already, but if you could speak specifically to why would a retiree want to invest in cryptocurrency? I feel like many of our participants are retirees, and they might feel like it's very high risk and very volatile. So.
Yes, and I think, we did touch on that. I think, first of all, don't feel any need to invest in Bitcoin. Not required, don't have to do it. If you're uncomfortable, don't do it. We're not trying to push any envelopes here. We're just trying to educate. We do think that there's a case that, that it could help us, but you should be comfortable. You should do your own research and use your own sort of feelings as a guide. High return is never our goal here at Wealth Analytics. Our goal is to protect your assets, to make sure that you live a long and comfortable retirement, and that we never forget rule number one, which is don't lose the money. And we would never suggest putting large sums of money, of your retirement money in particular, into something like Bitcoin. However, for some, they say, I'm interested, and it's kind of an idea that I would like to incorporate. And if you did, you can certainly feel free to reach out to our team. We're not trying to sell anything to anybody. Our job is a fiduciary to protect your assets and get you a great retirement.
Wonderful. These two kind of go hand in hand. How is Bitcoin purchased? And then you mentioned, one way is to purchase an ETF. So is there a specific Bitcoin ETF that you would recommend?
Yeah. So, we can purchase in any of your accounts Bitcoin using an ETF. I am recommending IBIT, which is the grayscale Bitcoin. It's the BlackRock Bitcoin, and it's the second largest one at the moment, but it's taking a lot of the assets from Grayscale. I think it'll be ultimately the largest one, and it'll be the most liquid. The more money that's in there, the less a big investor can cause a rock in the price. So we do like the BlackRock IBIT at this point in time. The cost is, like 25 basis points. So it's there are some that are cheaper, but they're smaller, and we would certainly like cheaper. But liquidity is a big important factor early in the game here.
And then we had a question. You mentioned grayscale a couple of times. What is grayscale?
Grayscale is a forerunner to the ETFs. It is now an ETF. Grayscale offers a Bitcoin spot ETF. The reason that we're not recommending that is that the fee is 1.5%. They're expected to create a new class of shares that will substantially reduce that, but 1.5% versus 25 basis points or 1/4% is the reason that we would not recommend Grayscale at this point.
Mm-hmm. And then we had a question here. Can you talk about what is a Bitcoin wallet? How does that work?
Yeah, so I referred to something earlier that was called Coinbase. So without getting into a lot of detail, I mean, you can store your Bitcoin on your computer. You can store it on a USB. It's a digital token. So you carry it with you. Of course, there's always a risk of losing. So a lot of people have opted for what is referred to as a digital wallet. I'm using Coinbase. It happens to be an account that I have, and I could pull it up and show it to you if we were together personally. But basically, it's like a brokerage account, but you can purchase not any, but many cryptocurrencies inside of your Coinbase. I just have Bitcoin, and it shows you how many shares of Bitcoin I own. It shows transaction history every time I add money, every time I trade, and it's just a ledger of the account. And if I wanted to turn my Bitcoin into cash and move it into my bank account, I could do that literally in a minute or less. So I can sell it, transfer it right back to my bank account. So it's a very efficient way to move money around. And you can certainly do that on your own if you like. And I would encourage people to consider opening an account. Maybe put a small amount of money in there just to become familiar with it, sort of dip your toe in the water before you jump all the way in. But again, we would not advocate, it would be a very small percentage inclusion in an overall portfolio, 1 or 2%. And we could buy that right in your account using an ETF.
Mm-hmm. And do you think banks will ever store Bitcoin?
Good question. So there's actually another piece of legislation that's going to happen, I think this week. And you never know with Congress, but there is a bill that would allow your bank to store your Bitcoin. Now that hasn't passed yet, but it's on the agenda, and could happen by the end of the week or maybe early next week. We'll know whether banks will be allowed to store your Bitcoin. Of course, I think they would like to, and that would be another evidence of more widespread adoption.
Definitely. We have a really good question here. This person's, concerned about the environmental impact of cryptocurrency and just wanted your take on that. Is it bad for the environment? Pros and cons.
Definitely energy intensive. So, we're in an interesting time of computer usage. Obviously, we have the advent of artificial intelligence. I mentioned NVIDIA, making these massive chips in these huge computer warehouses. So there's a massive amount of energy that's required for artificial intelligence and certainly for Bitcoin. So I would say that is not good for the environment. If that's a concern for you, then cross it off your list. Having said that, there's a lot of work being done by Tesla to create a world where energy is in abundance, and that's using the combination of solar panels and battery technology. And I think ultimately that's the solution. There's an unlimited amount of solar available. It just hasn't been implemented because we're running under an old energy grid system. And it's not here and ready today, but it's moving rapidly. So that would be also another thing to keep your eye on.
Hmm. Awesome. And in your opinion, do you feel like Bitcoin is correlated with other assets?
Well, it's interesting because I do feel it's definitely correlated to the higher risk assets at this stage. And ideally, you wouldn't want that necessarily. But a lot of that has to do with the fact that it's been such a speculative asset class, very, very high return, very, very, very high volatility. And I think that may change in the future with wider spread adoption. I think you could argue that you would see less volatility, less, certainly not the type of returns that we've seen in the past. I think those are likely unsustainable. But certainly that is to be determined. That's speculation on my part that you would see lower volatility going forward, hence lower return, and then maybe it becomes a more of a stable asset class. That would be a positive from my perspective. Not true today, but what we've tried to lay out here is that Bitcoin is changing a lot. It's becoming much wider. You see much wider adoption, really everywhere. And that's why I wanted to come to you today and say, look, this is, things are changing here. It's not just status quo. And whether you choose to adopt it or not, it's a good idea to, be educated. And it certainly will make interesting cocktail conversation if nothing else.
That's for sure. We have a great question here. What is the intrinsic value of Bitcoin?
Well, there really is no intrinsic value. Bitcoin is nothing. Yet, some people think there is value, and currently they think a Bitcoin is worth $68,000. It remains to be seen. I think what you could look at least again, what I refer back to is fiat currency. I much prefer, frankly, to invest in a great company, with the Costco's of the world. And, they're much easier to understand, right? People come in, they buy, the price goes up over time. Bitcoin is much more difficult to comprehend. What Michael Saylor will say is if you have $2 or $3 million, you want to pass that along 100 years, really Bitcoin is the best vehicle to do that. Now that's Michael Saylor talking, that's not Troy Daum talking, but I think it's an intriguing thought. The idea is that with 21 million minted, the price goes up over time and it becomes a pure way to transfer assets to a future generation. Does it have intrinsic value? That's a great question. I don't have an answer other than to say that, you can look at what it trades at today and it must have some.
Mm-hmm. Mm-hmm. All right. Well, I think we got through all of our questions here. I'll keep an eye on it if any else come in, but I wanted to, take this opportunity to say thank you to Troy for doing this presentation, even though he's a little bit sick. I think that was excellent job, and we all really appreciated that education. And to all of our wonderful clients who are on this call, thank you for attending and listening. And I know you all have your own individual, needs, goals. So if you're interested in talking more about, your account specifically and your situation, feel free to give us an email or a phone call and we can talk about, if this is a good decision for you, if you'd like to buy it in your accounts or not. Either way, I think it's a personal decision, and this was really about education and just getting some good updates on cryptocurrency. So I think we'll, wrap it up. Troy, is there any last words you'd like to say?
Well, I just wanted to say thank you to all of you. It's a great honor to be able to help you in your retirement journey. And as we celebrate our 25th anniversary, I think of all the many milestones you have achieved. And we've had the opportunity to be involved with seeing people retire and send kids to college and and really living life's dream. So for that, thank you.